Live from Dubai today, this is Bloomberg Daybreak Europe. I'm Jumana Bersacci with your top stories. A hawkish hold. The yen gains as the Bank of Japan surprises with a 6-3 vote split on interest rates. Governor Ueda speaks in the coming hours. Crude keeps climbing. Oil gains for a seventh day as the White House weighs Iran's latest proposals. Plus, without a way out, German Chancellor Friedrich Merz says the U.S. is being, quote, humiliated by Iran's negotiators with no clear exit strategy for the war. And a check on markets. Things are trading sideways. We had a muted price action in MSCI overnight, though, of course, a lot of fireworks around the Bank of Japan. We'll get to that in just a moment. But broadly speaking, what we are seeing is cautiousness prevailing. S&P futures up just a couple of basis points as we head into yet another busy day of earnings. We'll talk about what to watch out for today as we gear up for a lot of Magnificent Seven names reporting later in the week and the Fed. And then European markets also seeing a bit of green on the screen today, up 0.3%. Now, switching over, let's take a look at where oil is trading, because once again, we are inching back up to $110. 109.5 is where we're at for oil, for Brent, up 1.2%, as we keep a close eye on geopolitical developments, awaiting the U.S. response to the Iranian proposal. This as the Strait still effectively is shut. Dollar yen also in focus. As I mentioned, we had the Bank of Japan, a bit of a hawkish surprise there, so that's giving the yen a bit of a boost versus the dollar today at 0.2% firmer. We are trading at 159. That's the big figure. And then the pound, also keep a close eye on the pound developments as we think about the political situation back home and the fact that Keir Starmer, the Prime Minister, faces a possible investigation into whether he misled Parliament. So something to watch out for today. And then obviously we have the Bank of England on Thursday too. But in terms of other risk events to watch out for today, earnings in Europe. So 7 a.m. in about an hour's time, we get results from Barclays. So first of the UK banks to be reporting. Keep an eye out on that. And BP as well. It's going to be a big one to watch out for in energy space. And then later on at 9 a.m. UK time, we get ECB inflation expectations. We'll see whether there's been an uptick there on back of the higher oil prices. And then we have the Norges Bank Investment Management Annual Conference to watch out for. And we'll have coverage from our colleague Francine Lacroix from that conference. And with that, let's get started. Well, the yen is strengthening after the Bank of Japan raised its inflation forecast, with 3 policymakers backing a rate hike as risks mount from the war in Iran and a surge in energy prices. Bloomberg's Japan economics reporter Yoshiaki Nohara joins us now from Tokyo. Yoshiaki, first of all, I think a lot of people are latching on to the split and the fact that you had 2 additional dissenters, 6-3 in total. How much of a surprise was that to market participants?
I think it's fair to say that the market participants expected probably 2 dissenters, but 3 is definitely a sign that they're turning a little bit hawkish. But that doesn't mean that they're committing to June as the next timing of next hike for the timing. So we will be watching what the Governor Ueda is likely to say at the press conference later in the day.
Yeah, and whether he plays this up or tones it down is going to be key. And that press conference starts at about an hour and a half time. Talk us through the market reaction here. We've got dollar yen up on screen, and I can see that yen has seen a bit of a bid, but it's not a lot. It's only 0.2% firmer versus the dollar.
Well, that's a really good point. Yes, it strengthened a little bit, but it's not much. So meaning that the people are probably looking for more concrete signals from Governor Ueda, because it's definitely the communication that is now the key point in terms of setting the expectations for the policy direction from here. And we'll be watching every word that Governor Ueda is be pronouncing at the press conference later.
Yeah. All right, Bloomberg's Yoshiaki Nahara, thank you so much for the overview there. And of course, we are seeing equities dip, though. The Nikkei down by 0.9%. The press conference by the Bank of Japan Governor Ueda, as we were just speaking about, is at 7:30 a.m. London time. Terminal subscribers can head to it on Live Go to follow as it happens. Well, stocks in Asia more broadly are holding near their 2-month highs. Let's get an update from Avril Hong in Singapore. Avril.
Yeah, Jumana, to your point of the Nikkei treading water, I mean, you're down about 9/10. The drag is in chip stocks. You are also seeing perhaps the considerations. Can the Nikkei's outperformance versus the topics continue if we're seeing a slightly less dovish BOJ or a BOJ that is determined to hike rates? Aside from that, it is, of course, about tech. We are seeing a structural rebalancing in the region. That love for AI hardware darlings is supporting South Korean markets, helping it to surpass the likes of the UK in terms of total market cap. It is now the world's 8th largest, and we are, of course, seeing some idiosyncratic stories under the hood. Yes, you are seeing SK Hynix in the green. Samsung is slipping today, though. LG Electronics is one to watch because there's a reported tie-up with NVIDIA. Other idiosyncratic stories in Taiwan as well. TSMC is facing pressure today, but we are seeing MediaTek helping to prop up the TAIEX on a day where we are hearing from some of these industry checks from TF International Securities, I should say, and the talk is about how there's a potential open AI tie-up with MediaTek for smartphone processors. Now, flip the board, staying on the tech team, the other thing that we're watching, of course, is the Hang Seng Tech. Yes, we are seeing mainland, those AI hardware names are also really popular, but the Hang Seng Tech is underperforming today against the backdrop of the CATL Hong Kong share placement that came in on the lower end, and the other, China basically blocking Meta's acquisition of Manus and forcing that unwind there. So overall, there is a sapping of sorts of investor optimism and liquidity, and this is what you're seeing in the market so far. Jumana?
Yeah, big story over there on China-US tech war. Avril Hong in Singapore, thank you. Well, the S&P 500 is on track for its best month since 2020, with traders now awaiting this week's big tech earnings. Let's bring in Venram, cross-asset strategist at Bloomberg MLive. Maybe we can start with earnings and then we'll pivot, I guess, to central banks because there's a lot going on this week. We have a huge number of Magnificent Seven companies reporting the next couple of days. What is the likelihood that this tech rally that has really picked up momentum the last couple of weeks actually stalls once these earnings come through?
I think there's a very good chance that they will stall in the short term because, we've had earning expectations bid up. And I think that, considering the length of the rally in the short term, despite the Iran war, I think that we have run up a lot and there is some scope for profit taking in the short term. But, Jumana, what interests me is the long-term outlook. If you look at the NASDAQ 100 fair value, if you discount the future cash flows going back, looking at it as a long-duration bond, discount the cash flows back.
Yeah.
And look at the fair value. The fair value is 29,910. So that means a 10% upside is still in the works over the long term. So if the Iran war, if the ceasefire holds, I think that, the NASDAQ 100 will get to 30,000 by the course of this year.
Okay, interesting what you're saying about future discounting. Let's talk about the macro and these central banks who were gearing up for what was going to be a mega week for central bank decision-making. Bank of Japan first out the gates, pretty hawkish. How does that set us up for the rest of the banks this week?
Well, we saw 3 dissents, which is more than usual, but I think that we may see that translate into the Bank of England's decision as well. Yeah. Hope Hill, the chief economist, has already said that, not making a decision is not an option. It's a foolish option. So I think that you would at least expect him to dissent against holding rates. The part here, interesting part here, Jumana, is that the Bank of England has been missing the 2% inflation target for the better part of 5 years. Yeah. So I think that, if they continue to hold rates and if the economy is doing pretty okay, if you look at the purchasing manager indexes. So I think that, that's the tension that we should expect going into the BOE.
Yeah, let's see the messaging that comes out. And indeed, the dissents, because the Bank of Japan has set the tone there. Van, thank you so much Vinram, cross-asset strategist at Bloomberg MLive. Well, as you were just speaking about, there's a lot going on in terms of earnings, too, not just central banks. I want to bring you the latest from Novartis. It is a miss on core EPS. Novartis' first quarter core EPS has come in at 1.99 versus estimates of 2.10. In terms of other numbers that we are getting, net sales are expected to grow in low single digits. They've broken out some of the key products that they sell and specific sales over there. But overall, the first quarter EPS number a little less than market expectations. So that is coming through from Novartis. And overall, the net sales number has come in at 13.11 billion versus estimates of 13.36 billion. So a miss on overall net sales as well. Well, still ahead, a make-or-break vote for UK Prime Minister Keir Starmer. MPs could trigger an investigation into whether he misled Parliament over Peter Mandelson's vetting to be US ambassador. We'll bring you the latest. And the German Chancellor says President Trump is being humiliated by Iran. More on Friedrich Merz's comments next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The White House says President Trump has convened national security officials to review Iran's latest peace proposal. Tehran had sent across a plan after talks in Pakistan failed to yield any results, which reportedly included a deal to reopen the Strait of Hormuz in exchange for an end to the U.S. blockade.
The proposal was being discussed. I don't want to get ahead of the president or his national security team. What I will reiterate is that the president's red lines with respect to Iran have been made very, very clear, not just to the American public, but also to them as well. So they're considering it? I wouldn't say they're considering it. I would just say that there was a discussion this morning that I don't want to get ahead of, and you'll hear directly from the president, I'm sure, on this topic very soon.
For more, I'm joined by Bloomberg's UAE Bureau Chief, Dana Khrish. So, Dana, we understand from what Caroline Levitt just said that the U.S. are taking a look at the Iran counterproposal, but they also have some red lines. Do we know what those red lines are?
I mean, it's obvious what it is. That's the reason they went to war, Israel and the U.S., against Iran, and that's the nuclear issue. So the proposal, as we understand it, and from Iranian media yesterday, too, citing what Araghchi said to the Pakistanis, is that they would lift their own blockade, Iran's own blockade of the Strait of Hormuz, in return for the U.S. lifting the blockade and a guarantee that there will be no military action against Iran in the future. And that's also very difficult. That means the U.S. would have to abandon its own leverage. It would have to try to restrain Israel, but that is the leverage that they have over Iran. Now, in terms of lifting the U.S. blockade, this is tough to see, right? Because Trump himself has said that the naval blockade is there to pressure Iran eventually to sign a deal. And he's been positive about it having some very much economic pressure on Iran because of the oil storage and all of that. And we saw Secretary Rubio yesterday also telling Fox News that there is extraordinary pressure on Iran. But he also said that if Iran is going to reopen the strait on its own term, meaning having control over it, tolling shippers, then that is not what the U.S. would agree to.
Yeah, so Iran's looking to exercise sovereignty over the strait obviously is a non-starter as far as the U.S. is concerned. What is happening around the strait now? Has there been any new activity or vessels transiting through?
Yes, so we saw the first LNG, the first vessel carrying LNG yesterday passing through Hormuz. This loaded, of course, off of the UAE from ADNOC, and the vessel is owned by one of ADNOC's unit. And it had turned its transponders, I believe, March 27 and reappeared west of India yesterday. So many see this as hope that this means a return to at least LNG shipments going through the Strait of Hormuz. Yeah. But that is hard to see with such an effective closure of the strait. There are several ships actually still loaded in the Gulf, but haven't moved. So doubtful that this would actually mean a resumption of what was before the war, which is at least 3 LNG ships going through the strait daily.
Yeah, daily. And I believe, according to our Bloomberg colleagues, that this is the first LNG ship that has actually made it through since the war started.
Exactly.
Yeah. Dana, thank you so much. Bloomberg's Middle East breaking news editor and UAE bureau chief Dana Khrish. Now, German Chancellor Friedrich Merz says the U.S. is being, quote, humiliated by Iranian leaders as President Donald Trump struggles to negotiate an end to the war. In unusually candid terms, the German leader expressed skepticism about the U.S. strategy.
At the moment, I can't tell what strategic exit the Americans are pursuing, especially since the Iranians are obviously negotiating very skillfully, or perhaps very skillfully refusing to negotiate, and then letting the Americans travel to Islamabad only to send them back without any results. An entire nation is being humiliated by the Iranian leadership, especially by these so-called Revolutionary Guards.
Let's bring in Bloomberg's Balázs Pence. Friedrich Merz not mincing his words there. Balázs, do these comments show that U.S. allies are sort of getting a bit fed up with the situation in the Hormuz Strait and that their patience with how the U.S. has been handling this is also running thin?
There's certainly a tone of frustration in Merz's words. Jumana, I mean, clearly this is a war that the European allies did not want. They were not consulted on, and they feel like they're bearing the brunt of the economic cost along with Asian economies. And that's really hurting Merz domestically. So he's being a little bit more candid, a little bit more forceful in his criticism. If we zoom out a little bit, we see that more broadly over the past year and a half, European leaders' strategy towards the U.S. has been sort of to play nice, to try to smooth things over with President Trump. They felt like they could get more done that way. Clearly, that has changed. We have heard pretty harsh words of criticism from Giorgia Meloni in Italy, from Pedro Sanchez in Spain, from several other European leaders as well. They now feel like that strategy hasn't worked. Their concerns haven't been listened to, and now they need to try a different approach, a more direct approach, something that perhaps plays a little better domestically for them as well.
And Balázs, you say that it's not just Merz, but increasingly other European leaders who are becoming a little bit more outspoken and perhaps willing to take on Trump directly. He doesn't respond well to criticism. How is this likely to shape their future relationship between the U.S. and European allies?
That's a really interesting question. We haven't heard anything from the president or indeed from the U.S. administration, anything directly in response to Merz's words, which maybe is interesting in and of itself. Like you said, usually they don't let things slide, and clearly they have been frustrated with that transatlantic relationship. They felt like they haven't gotten the support from the Europeans that they might have been looking for in this Iran conflict. So this will probably add to that feeling of frustration, of that resentment. But clearly something has changed in that relationship, and the Europeans are becoming more forceful in their criticism. So the question is, will the U.S. be able to change their tack, or will they continue to be confrontative with the Europeans? Will they try to listen to some of that criticism, or do they feel like they don't need to do that because they can do whatever they need to do in the Middle East on their own? So it's going to be very interesting to keep an eye on that relationship as it evolves over the next few weeks and months.
You know, our colleague Oliver Kirk was tracking the Hungarian election very closely, and the fact that since then Europe has managed to pass on this loan to Kyiv, which had been blocked essentially by Viktor Orban. And I just wonder, maybe one of the byproducts of the war in Iran is that you are going to see deeper integration within Europe and more of a push for what Macron coined as strategic autonomy here, Balázs.
Well, certainly it's a wake-up call for Europe when it comes to energy security and when it comes to diversification of energy resources. And there's another way the Hungarian election may be playing into the way European leaders are treating their relationship with the U.S. This was yet another election where Donald Trump's support did not help the incumbent, Viktor Orban. And we have seen this time and time again in elections across the world, where the party that was endorsed by Donald Trump ended up losing. So maybe that's part of the calculation as well for people like Merz, for people like Macron and other European leaders. Maybe you don't want to align yourself too closely with Donald Trump because electorally that hasn't paid off very well so far.
Yeah, to say the least. Bloomberg's Balázs Pence, thank you so much for the reporting there. Well, coming up, King Charles and Queen Camilla begin their state visit to the U.S. More on whether they can repair the special relationship next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some of the other stories we're following this morning. A Californian man has been charged with trying to kill President Trump during an attack on a media dinner in Washington over the weekend. The 31-year-old made his first appearance in federal court, where he was also charged with gun offenses. The suspect had sent a manifesto to his family members that was included in charging documents, which didn't mention Trump by name, but appeared to refer to him. President Trump says ABC and its parent company Walt Disney should immediately fire late-night host Jimmy Kimmel over a broadcast last week, which the president says included a despicable call to violence. Kimmel staged a parody of the White House Correspondents' Dinner 2 days ahead of the shooting incident, referring to the First Lady as an expectant widow. Melania Trump has also urged ABC to take a stand, calling the monologue hateful and violent. Kimmel has defended his comments, saying Donald Trump is allowed to say whatever he wants to say.
Just 2 days prior to the shooting, ABC's late-night host Jimmy Kimmel disgustingly called First Lady Melania Trump an expectant widow. Who in their right minds says a wife would be glowing over the potential murder of her beloved husband? And having experienced what I did with the First Lady on Saturday night, I can tell you that she was anything but that.
And President Trump has welcomed King Charles to the White House amid pressure on Britain's special relationship with the United States. Charles and Queen Camilla were greeted by the president and the First Lady. The king will address a joint meeting of Congress later today. And a look at markets as we head into the European Open. And the handover from Asia Pacific slightly cautious today, dipping into negative, though still holding near that 2-month high. And of course, a lot of focus on the Bank of Japan today, the impact it's having on the Nikkei. That index is down about 0.9%, digesting the hawkishness that emerged from the Bank of Japan. S&P futures trading sideways, but still on course for its best month since 2020. So very strong April for S&P and for Nasdaq here, gearing up for the Fed meeting tomorrow. And of course, a whole bunch of Magnificent Seven earnings that are dropping, including the likes of Microsoft and Apple to watch out for. European markets leaning towards the green. And then, of course, we've been tracking the moves in energy very closely with the situation in the region. Ceasefire holding, of course, but still the strait is effectively shut. And the longer this goes on for, the more you're seeing upward pressure on Brent prices. So we're just shy of $110 here, up 1% for Brent. Dollar yen, as I mentioned, yen seeing a bid because of the Bank of Japan hawkishness. Now, coming up, we're going to talk more about the Bank of Japan as it raises its inflation forecast because of the Iran war. We'll discuss this inflation shock and more. Live from Dubai today, this is Bloomberg Daybreak Europe. I'm Jumana Bersachi with your top stories. A hawkish hold. The yen gains as the Bank of Japan surprises with a 6-3 vote split on interest rates. Governor Ueda speaks in the next hour. Crude keeps climbing. Oil gains for a 7th day as the White House weighs Iran's latest proposals. Plus, without a way out, German Chancellor Friedrich Merz says the U.S. is being, quote, humiliated by Iran's negotiators with no clear exit strategy for the war. And a look at markets, things are coming off a little bit. So we had a lackluster close for Wall Street yesterday, and the handover from Asia Pacific also a little bit more cautious today. So we are down 0.3% for the broader index, but still very close to a 2-month high. S&P futures also trading sideways. This after another positive close yesterday, marginally so. And of course, as we've been talking about, both the S&P and Nasdaq on track for their strongest months. Going all the way back to 2020. April has been stellar in terms of performance. And then the big question is, can this rally continue in light of the upcoming headline risks? We've got the Fed meeting tomorrow and a bunch of Magnificent Seven companies also reporting in the next few days. So it's going to be a real litmus test for the AI trade there. European markets also up about 14 basis points. Gearing up for, as well, more earnings heading today, as well as the ECB meeting later this week. Take a look at Brent. We are up 1.1%, just shy of $110 here. So oil prices continue to creep higher with the situation on the Strait not being resolved yet. So let's see what the U.S. come back with to the Iranian proposal. Dollar yen getting a bid on back of Bank of Japan hawkishness. So we are trading just shy of 159, but still not a whole lot there. And the question is whether Bank of Japan will follow through on rate hikes at their next meeting in June. Let's hear from the Governor Ueda in about an hour's time. And the pound also in focus, keeping a close eye on political developments back home and a real question about the Prime Minister Keir Starmer's fate and whether this investigation will actually yield an outcome in which he may be removed. So that's one of the big questions in addition to the Bank of England meeting on Thursday. Time now for your front page news. The FT headlines the public criticism of the U.S. strategy in Iran by the German leader. The headline reads, U.S. is being humiliated by Iran, says German Chancellor Friedrich Merz. The paper says Mr. Merz is growing more critical of the Iran war as its economic fallout spills over into a domestic crisis. The Wall Street Journal reports on the latest revenue miss from OpenAI. The paper says the stumble is causing increasing concern amongst the firm's leaders as to whether they can now support their own data center spending plans. And the Times looks ahead to the first full day of King Charles's state visit to the United States. It says the alliance between Britain and the U.S., first formed by Winston Churchill, is now under huge strain. The paper says the monarch will tell Congress, quote, time and time again, our two countries have always found a way to come together. And you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go. All right, the yen edged higher after the Bank of Japan kept its policy rates unchanged in a split decision. Joining me now to discuss the latest market moves is Frédéric Carrier, Head of Investment Strategy for UK and Asia at RBC Wealth Management. Frédéric, good to have you with us. And I'm just wondering whether the hawkishness that we got out of the Bank of Japan today is going to be mirrored by the ECB and by the Bank of England later this week, and that they have to respond to some of the inflationary pressures coming through from higher oil prices.
Good morning. Look, in the case of Japan, it does seem that the bank has felt perhaps it was slightly behind the curve for some time with regards to inflation. This is not a situation that is replicated in England for the Bank of England or for the ECB. We expect both banks to remain on hold. For the Bank of England, there will be a very big focus on the split of the vote and whether any member is actually voting for a rate hike. It's also a forecast meeting, and we expect growth forecast to be lowered marginally and inflation forecast just increased marginally. For the ECB, we expect Madame Lagarde to talk about the war intensity, longevity, and how that will impact inflation. We expect it to be the bank to be in a wait and see period. However, because of the pricing power in Europe, because of the labor market strength, it is the one region where we do expect interest rates to go up this year at the rate of 2 rate hikes.
So this is what I wanted to ask you about, specifically Europe. The longer this war goes on for, the more you're going to see upward pressure on energy prices. But at the same time, you're going to see downward pressure on growth. Which one of those two are going to win out when it comes to ECB decision making?
Both are important, but certainly the impact of inflation is what they will be laser focused on in order to ensure that there's no secondary impact, secondary round effect of inflation overall on the region.
You say in your report that you think that European inflation-linked bonds are a good buy here. Are they not necessarily reflecting the inflationary shock that's to come later down the track?
Well, that's why prices are already reflecting 2 rate hikes, and that is where the opportunity lies. We're also looking at steepeners. We think that that's a little bit early to get in because the inflation surprise over the next couple of months is likely to be on the upside. So we think that inflation-linked bonds are a more attractive opportunity in Europe at the moment.
Yeah. And how would you put the Fed in comparison to the Bank of England and ECB? It's interesting to note that investors are very quick to price in a rate hiking cycle for the Bank of England and for ECB, but less so for the Fed. The thinking there is that perhaps the growth pressures will dominate the inflationary pressures. How are you thinking about it?
So we also expect no change for the Fed. We think that there's going to be a lot of pushback on any easing pressure that we could have had earlier in the year because of the fear of slightly higher inflation. There will be the confirmation of Kevin Walsh going ahead, but even so, we would think that only in the case of lower inflation would we see interest rate cuts. So for now, we really see the Fed being on hold.
Are you surprised that the S&P is on track for its best month since 2020 with everything that's going on in the world right now?
It's been a very volatile year, but we have seen earnings estimates for the S&P 500 increase for both 2026 forecasts and 2027 forecasts. A lot to do with higher energy earnings, with higher energy costs, and also higher sort of technology earnings. And so we think that investors tend to be happy to look through a shock so long as there is confidence that next year's earnings are going to, earnings growth is going to resume. And so with a forecast of 15% earnings growth in 2027, this is what is attracting investors. Also, given the correction that we had seen in tech stocks earlier in the year, tech stocks had reached a lot more attractive valuation level. So attractive valuation level, better earnings forecast, and all of that made for quite a powerful recipe for higher gains.
Yeah, what is your allocation looking like right now in global equities? Are you overweight the US then?
We are neutral, both in terms of global equities and in terms of regions. We think that having a diversified portfolio is the best way to go at the moment. Volatility is really what we're seeing this year. It's a midterm election year in any case. And in those years, you tend to see peak to trough corrections on average of 20%. This year, the war is what has caused the volatility, but we think that because of the risk of headline inflation, stay invested up to your target strategic level, and again, try and ride this midterm election year where usually there's a big drawdown, but also a bounce back and a return to all-time highs.
Frédérique, so good to chat to you. Thank you so much for coming on our show. Frédérique Carrier, Head of Investment Strategy for UK and Asia at RBC Wealth Management. Well, UK Prime Minister Keir Starmer is bracing for another day of scrutiny in Parliament over his controversial decision to appoint Peter Mandelson as ambassador to the United States. Starmer now faces a high-stakes vote later today on whether to launch a formal investigation into claims he may have misled MPs about whether Mandelson's vetting followed due process. Bloomberg opinion columnist Rosa Prince joins us now. Well, Rosa, we were talking about, the challenge to Keir Starmer a week ago, and he seemed to have survived that. Do you expect him to survive this latest attempt or the latest developments that could transpire this afternoon?
Yes, I do. And that's because Keir Starmer's governing Labour Party is currently in a dominant position in the House of Commons. They have the most MPs. So it would be very unlikely for all of those MPs or even insufficient numbers to vote against him and bring him down. But what's more important here is, as you say, Keir Starmer is unable to move on from this scandal. And I think that's the real reason that the opposition brought this motion to vote against him. I think that what they're trying to do is kind of punch that bruise, keep this scandal going, and almost as important as which way the vote goes, because it's certain it will win, is whether Keir Starmer can win the argument this afternoon, whether he can convince his own MPs he's still in charge, because going down the track, that challenge to his leadership still exists, and it's really in their hands, whether he remains Prime Minister.
And of course, we have local elections coming up next week on May the 7th. What impact could today have on the results of those elections?
Yeah, and just to go back to the last question, that's another reason why the MPs won't bring him down now, because they're heading into these elections. I wonder whether voters are following all the twists and turns of parliamentary process here. It's got quite complicated about who said what and which official did what. But I think what is more damaging is this general impression that the government hasn't got a grip, that they are not focusing on the things that matter to them, that the Prime Minister isn't in charge. And if those elections are bad for the Labour Party, which all the opinion polls suggest there will be, we could see another challenge to Keir Starmer's leadership. And as you know, the markets are not happy about that either. So we're in a bit of a sort of death spiral here for the government if they cannot move on from this scandal, which has been going on for weeks now.
Bloomberg opinion columnist Rosa Prince, thank you so much for the latest there. Well, it is a busy week for earnings. With a host of banks reporting, Barclays is expected to detail a jump in global markets revenue later this morning. Analysts are looking for a possible share buyback and clarity on the size of an impairment in relation to the collapse of specialist lender MFS. Now, let's get the thoughts of Philip Richards, senior banks analyst at Bloomberg Intelligence. So we're coming off U.S. banks earnings season. Most of them reported pretty strong first quarter trading revenue, at least in the equities business. Are we expecting that from Barclays as well?
Yeah, good morning. I think we can actually. The US banks overall reported about 17% rise year on year in total trading. For the European banks, analysts are expecting about a 10% rise. So clearly there is the upside potential there. And if you see what's really driven that for the US banks is some of the themes you've been talking about earlier this morning. It's about interest rate expectations have been moving quite aggressively. Oil prices have been swinging, equity market valuations. So all these are obviously very conducive to banks' tradings. So yes, therefore, we would expect quite a positive surprise. And for Barclays, analysts are expecting about a 3% rise in local currency terms, more like about 13% in dollars. So again, quite big upside versus what the US banks reported.
As a banks analyst, what are you going to be watching out for in terms of commentary? It's not just Barclays. Later this week, we've got obviously UBS, Deutsche, BNP, Paribas. What are you looking out for specifically in terms of what these CEOs have to say? And I guess, one of the questions there is maybe the impact the war is having on some of these European bank operations too.
Yeah, as you say, there's a lot going on clearly geopolitically at the moment. So what is that impact having on the companies themselves? Also a number of issues. UBS last week, the Swiss government came out and said that their the increased capital requirement for them initially said it was $26 billion. They watered it down to $20 billion. It's still a high number. So what's the UBS's reaction to that? We're interesting to see. You also mentioned about private credit exposures there previously. Obviously been a lot in the press of late. BNP, Barclays, Deutsche are the three probably the most exposed. They're the ones in terms of what they've disclosed so far in terms of the private credit market. So what is their exposure? What losses have they seen so far?
Philip Richards, senior banks analyst for Bloomberg Intelligence. Thank you so much for the preview and what to expect. Loads of bank earnings coming up this week. Well, coming up, China seeks to unwind Meta's acquisition of the AI startup Manus 4 months after the deal was sealed. Details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. China has moved to block Meta's $2 billion acquisition of agentic AI startup Manus. But questions remain about if and how the deal can be unwound some 6 months after it was agreed. Let's get more on this with Bloomberg technology reporter Yuli Prunell in Hong Kong. What do we know so far about why Beijing is making this move? Why are they looking to block the acquisition?
Yeah, Jumana, well, they issued a very simple one-line statement saying that they were blocking foreign investment in the startup in line with rules and regulations. But you really just have to look at the wider geopolitical and technological picture to see that, as some analysts told us when we started reporting this out, that just look at what the U.S. is doing in terms of trying to curb the use of the most sophisticated AI chips around the world, following the rise of DeepSeek and the threat that that poses to U.S. tech companies. People said, look at this in the context of Beijing wanting to control the most sophisticated and important technology that exists in the world right now. This is really all about strategic competition, the analysts have told us, and it's about China wanting to exert control over what it says is its company, even though, as you mentioned, the company is now headquartered in Singapore.
Yeah. So then, okay, given that the company is now headquartered in Singapore, does the Chinese government even have the power to reverse the deal? How would that actually work in practice?
It's unclear because the people, the staff, are in Singapore. They are, we understand, to have been sort of absorbed into Meta, as happens when these kind of deals go through. So it's unclear precisely what could happen. There's been some reporting that there could be fines on both companies. But I think it's interesting also to think about if this is truly blocked, what it means for Chinese AI startups, for example, who might want to consider going abroad. I mean, a startup like Manus, of course, China is a large market in its own, but they can domicile in a country like Singapore and then become a global company and serve global consumers. Would this stop other similar companies from maybe trying to do it? And then also of interest, Meta. This is a company, one of the most powerful companies in the world, that is pouring billions of dollars in CapEx trying to build out its artificial intelligence capacities. And an acquisition like this is important because it gives them a toehold in what is described by many to be the most promising new era, the promising new sector or application for AI, which is these agentic services. The idea that you can use a service like Manus and set up agents to go out and do things for you. This is considered to be the kind of most promising new wave of AI. So how does this hurt Meta? They also get a huge amount of advertising revenue from Chinese companies. Could that be an issue for them as well? But again, view it in terms of geopolitical rivalry. I think China versus U.S. and the most sophisticated tech and these powers trying to protect their own interests.
Bloomberg tech reporter Neely Purnell, thank you so much. Really good to have your perspective. Now to some other corporate stories we're following today. Microsoft and OpenAI have agreed to end the software giant's exclusive rights to sell the startup AI's models. The change opens the door for the ChatGPT maker to pursue deals with other cloud providers, including Amazon. In return, Microsoft will no longer pay a revenue share on OpenAI products it resells on its cloud. 9 jurors have been seated in the trial between Elon Musk and OpenAI chief Sam Altman, a case that could determine the future of the AI company. Musk accuses co-founder Sam Altman of abandoning the company's altruistic principles and converting to a for-profit company. The pair co-founded OpenAI more than a decade ago before their relationship soured. Altman and the company say Musk is trying to undercut competition for his own AI startup. And plenty more coming up here. This is Bloomberg. Stay with us.
Our researchers revised down our growth estimates in the US and around the world slightly, maybe slightly less in China. And we've revised up inflation more than 140 basis points in Europe, for example. So we really see an inflation shock coming through to some extent, and we see growth mitigated.
That was Bernie Mensah, Bank of America's president of international, speaking to Bloomberg at the bank's conference in Singapore. Well, a couple of charts that I want to end the show with today. Given we are heading into a whole bunch of central bank meetings, this is just to show you that front-end yields have been moving higher ever since the start of the Iran war. And most pronounced is UK. Two-year yields in the UK up 87 basis points since the war began. Also about 57 basis points for German yields as well. So that sort of sets the stage as we head into the ECB and Bank of England. Some hawkish pressures coming through, especially after Bank of Japan. Switching over, it's not just about the energy shock, though. We're also talking about commodities more broadly. Quite interesting that any FX commodities have also started to break up to the upside, which suggests that this isn't just a commodity story, but also spilling out into FX and also into these EM economies as well. So keep an eye out for that too. And then the final chart that I want to show you as we head into these Magnificent Seven earnings over the next couple of days, take a look at the capex spending plans. Major spenders seen deploying $700 billion, and this is, really a question about whether these companies can actually monetize the amount of capex that they've been putting into the AI space. In terms of other risk events to watch out for, we have earnings from Barclays coming up in a few minutes. We've got BP earnings too to watch out for. 9 a.m. UK time, ECB inflation expectations. And then later, we are keeping a close eye on the Norges Bank Investment Management Annual Conference. And just to let you know that today's edition of The Pulse comes live from that conference in Oslo. Guests include the CEOs of Norges Bank Investment Management and Formula One as well. And Bloomberg has the first interview with the Airbus CFO to discuss the Playmakers' first quarter earnings. That's on the close at 8 p.m. London time.